Hey, this is Kevin Romines with Geneva Financial, branch 1700. What are we going to talk about today? We're going to talk about VA loans, the advantages, many advantages a VA loan can have for you when you're buying and also when you're refinancing. Okay, regarding the VA loan, there's many advantages for a veteran when they're buying a home. Did you know that you can buy a 1 to 4 unit property using the VA loan for 100% financing? That's pretty amazing. So if you have interest at some point on some level of getting into investment properties, you could buy up to a 4 unit property, live in one of the units, and then rent out the other 3. But let's talk more. I'll head into the office and I'll walk you through some more details.
Okay, I've made it back into the office. Boy, it sure was nice and sunny out there, so occasionally I feel like my office is a dungeon. But at this point, this is the best place for me to kind of walk through the details of the VA loan for you. So let's kick this off. Let's get this thing started. All right, so the VA loan is backed by the U.S. Department of Veterans Affairs. VA loans are designed to help active duty personnel, military personnel, veterans, and certain other groups become homeowners at an affordable cost. Affordable, what does that mean? Well, that means 100% financing. And there's another item here called there is no monthly mortgage insurance requirement. This is as compared to other loan types. What do I mean by that? So the VA has a funding fee that takes the place of mortgage insurance. Gosh, cut that out, Caitlin. Water. No monthly mortgage insurance requirement compared to other loan types. What does that mean? Well, the VA has a funding fee. The advantage of the funding fee is it's rolled into the loan, so you don't pay for that out of pocket on a closing cost type basis. The funding fee does increase your loan amount, and therefore your payments go up a little, but it's not anywhere compared to mortgage insurance. Mortgage insurance on a typical loan is going to run anywhere from $100 to $350, depending on the loan size. Whereas a VA funding fee, it does increase the loan size, but it only increases the payments by $25, $30, $40, $50 a month at most. So the VA funding fee compared to mortgage insurance, the VA funding fee will come out on top in terms of giving you the best possible payment. Big advantage. All right, next slide. VA loans have a government guarantee. Lender is more secure in the loan due to the government guarantee, making it easier to get approved. That's very important. With the government guarantee, the lenders know that they can go ahead and give you the loan, and it's a little bit, they can make the guidelines a little bit easier for you to get the loan, and they can also offer you maybe better rates. And so, because they're backstopped by the U.S. government should that loan default. The VA loan is viewed as one of the lowest risk mortgage types available on the market, allowing for lower interest rates. Again, lower interest rates because of the fact that the Veterans Affairs Department is backing these loans. So these lenders can give you lower interest rates because of less risk associated with the loan. VA loans come in many different varieties. They come in a fixed rate variety. They also will come in a variable rate, as well as 30, 20, 15, 10-year loans. And then you can also use them to buy 1, 2, 3, and 4 unit properties. So maybe you're going to just buy your primary residence. Or maybe you want to buy a duplex or triplex or a fourplex, and you're just going to live in one of the units, and then the other units will pay you rent and therefore cover your mortgage. It's a great way to get into the investment world, but while using your VA loan, so long as you're going to own or occupy at least one of those units. That's a requirement. VA funding fees can be financed into a loan. I think I mentioned that before. If you have a disability, though, those VA funding fees can be waived. And that is huge. I do have a couple of borrowers that have had disabilities, and therefore their VA funding fee was waived. Depending on their loan size, that could have saved them $10,000, $15,000. So that's $10,000 to $15,000 that you're kind of ahead of the game at that point. And so talk to me. Let's discuss whether or not that is a good option for you. VA loans are assumable. If your home loan has today's low rates and the market rates rise in the future, the assumption features of the VA loan become even more valuable. What do I mean by that? So let's say that you bought a house today and you got the super low rate of, say, 2.25%. And let's say 5 or 6 years from now you decide to sell and you're going to go buy another property. Well, one of the options that you have is you can allow that incoming vet to assume your existing mortgage. If you allow them to assume their existing mortgage, and let's say that the current market rates at that time are 5%, and you got a 2.25%, well, that's a huge advantage to the incoming buyer. And at that point, that is valuable to you as a selling feature. So let's talk about that, and I'll show you some of the ins and outs of that. Minimum service required for VA mortgage. So if you're full-time active duty, you're going to qualify, get your VA benefits, I believe, in 1 year. However, if you are National Guard or other, then you may have to. I think the time frame on that is like 4 to 6 years. You have to complete your time frame on that in order to have access to your VA eligibility. So let's talk about that and make sure that you're eligible for when you want to go ahead and buy. Benefits of a VA loan: no debt ratio limit. Well, that's not exactly true. VA does have a debt ratio limit. That debt ratio limit is 41% of your gross income. So let's say, just to make nice round numbers, let's say that you made $10,000 a year. $10,000 a month. And the most you can have is 41% in total debt. Well, the new house payment plus any consumer debt that you have at 41% would be a maximum of $4,100 a month going out the door. So that's your 41%. What are the times that you can exceed the normal debt ratio? Well, you can exceed it if you have if you pass the test on two requirements. The first requirement is you got to have a 680 credit score. If you have a 680 credit score or better, you've passed that first test. The second test is what's called a residual income test. The residual income test says they're going to look at you, the size of your family. Let's say it's you, your wife, and your son, so 3-person family, and you live in the West, like I live in the West in Washington State. So let's say that that's the case. And let's say that residual income requirement is, let's say, $800. That's about what it would be. So going back to that test, or that income, you had a $10,000 income, you had $4,100 a month in total debt going out, and if you have $800 more, then that means you don't actually have a debt ratio limit. When you don't have a debt ratio limit, that allows you to buy that more expensive house and still be able to get the approval. I've personally closed loans when somebody had a 60% debt ratio. On any other loan in the industry, you will not find a 60% debt ratio allowed. I personally also know of other loan officers that have closed loans as high as 80% debt ratio. That's unbelievable. No other loan would do that. So that's a huge advantage on a VA loan. Curbing closing costs. VA limits what the veteran can pay for closing costs. There's certain closing costs the seller has to pay. So that's good. It helps keep you a bit more competitive on the closing costs. Foreclosure and bankruptcy. It's possible to secure a VA loan just 2 years removed from a foreclosure, short sale, or bankruptcy. That's another huge advantage of a VA loan over, say, a Fannie Mae loan. I believe also certain Freddie Mac loans, and it's not an advantage over FHA. FHA being another government loan, they're also 2 years removed. But if it wasn't for VA or FHA, you couldn't get that kind of time frame. I know Fannie Mae is up to 7 years on a foreclosure. So who wants to wait 7 years to be able to get a new mortgage? 2, that's all you got to do. Benefits of a VA loan: second tier entitlements. Even though many veterans have already used their loan benefits, it may be possible for them to buy homes again with a VA financing using remaining or restored loan entitlement. What is remaining and restored? Well, let's start with restored first. So let's say that you bought a home using a VA loan, and you're going to sell that home, and then you're going to move to your second home. So once you've sold that home and paid off that VA loan, you basically restored your eligibility, meaning all of your eligibility is now available to be able to be used again on your next purchase. That's restored. Remaining eligibility. So when you took out your first VA loan, you may not have used all the entitlement that you have. So, but you may not have been aware of that. So if you talk with us, we'll help you determine if you've got any remaining eligibility. It's possible that you can have 2 VA loans at the same time. It's possible you can have 3. So talk to us today about possible remaining eligibility and how we could use that to your benefit. Okay. Foreclosure avoidance advocacy from the VA loan program. The VA has a department that is just set up for foreclosure avoidance advocacy. The VA has staff members who advocate on behalf of the homeowners to find alternatives to foreclosure. There are many alternatives in terms of if you're behind on your payments, restructuring your loan. Maybe you put the missed payments at the end of the loan. Maybe you pay a certain percentage extra over and above your regular payment to catch up those payments. There's a lot of different alternatives. The VA has a department that will help you negotiate that with your lenders. Lifetime benefits. This program can be used repeatedly throughout your life. And I've mentioned before, restored and remaining eligibility. You can use this loan after loan after loan, home after home after home for your lifetime. You can buy a single family, you could buy a 4-unit, maybe you buy a duplex next time, maybe a triplex. You can cover a lot of ground with this loan. Give me a call today and let's get your loan started. All right, well, I got to get out of this office, man. Guys, not always designed to be in the office all the time. You got to get a little sunshine every once in a while. I'll meet you out there.
Okay, I hope you found that interesting and you got a lot of good details, good information from that. So again, if you're thinking about buying or refinancing and you're a vet, please give me a call. The interest rates are phenomenal right now, and so you want to take advantage. And there's a few things in there I bet you didn't know. I bet you didn't know that, for instance, given the right set of circumstances, the VA actually doesn't have any debt or debt ratio requirement. So, and technically, VA does not have a loan limit. VA uses Fannie Mae and Freddie Mac's loan limits, but VA itself does not have any loan limits. So there's definitely a few details in there I'm sure I surprised you with, or at least I hope so. So when you're ready to do a purchase or a refinance, definitely give me a call. Call me, text me, email me, get me on Facebook. However you need to do that, go ahead and get a hold of me, and I'd be happy to help you out with that brand new VA loan. All right, we'll talk to you again.